Good morning, ladies and gentlemen, and to all the bulls out there. What on earth are you doing? You guys are just completely failing in every regard known to man. You had the perfect setup today, or last night I should say. You basically had a gap and go opportunity, full on breakout. The Russell could have broken out of this range. Small caps could have rallied. S&P could have rallied. NASDAQ could have pumped like no tomorrow. You had all the net speculative positions coming in earlier this week, or I should say the previous week. And just to put into perspective, you have literally 65,000 short positions that you could have squeezed out. And just a fresh reminder for the bulls, this rally right here was a short squeeze rally. So you have the bear fuel, you have the catalyst, and you have the price opportunity, and you chose to absolutely do diddly squat with it. So complete fail on the bulls side of things. And then the question naturally leads to, where are we going? Well, guys, welcome to the video. As always, it really helps YouTube algorithm if you do not mind. But again, we go back to the levels over and over and over again. That is the Bible for trading. That is the Bible for basically what we're having now. So quick thing about the price action. You have volume that is stagnating as people are getting tired of buying these prices. They're having 1, 2, 3, 4, 5, 6, 7 days of opportunity to buy these prices, and they're not necessarily excited. Today, you had approximately from the open, you had a 0.5 gap, which would have led you to very close to all-time highs on the S&P. Just to put into perspective, if we zoom out here, from where we opened today to all-time highs, we had 1.76% on the S&P. NASDAQ was a little worse for wear, so tech kind of not really doing anything. And we actually have a pretty bearish sign on the Russell. Now, this is not confirmed because we don't have the breakdown, and you're not below the 182 level, which is around the 200 weekly area. Again, that can be support. We have to be cautious about that. But I am looking more bullish in the sense of the job numbers that came out today weren't actually super bad for the markets. If you take a look at them and take them at face value, ADP non-farm payrolls, and you guys know my opinion about ADP non-farm payrolls. They're absolute crap. They can't tell what they're doing at all. So ADP non-farm employment change, 100K versus 130 expected, and then revised from 113 to 106 on the previous reading. So are they right? Are they wrong? Does that mean non-farm payrolls comes in and blows it out of the water? Usually, if one's bad, the other one's good. So does that mean that's bullish? The market literally has no idea what it wants to do whatsoever. And yields, let's just jump over them real quick. Nothing new. Yields were selling off. People were going to bonds. So is this a sector rotation? If you look at the 10, this is just straight line down. There is little to no liquidity, or lack of liquidity, I should say, because people are buying. They're buying bonds, and people are expecting carnage in the market. Case in point, why they're discounting the future. The market is a future discount mechanism. And for those that are scratching their head saying that, well, if there's going to be a recession, don't I want to get more money for my bond? Well, what it is, it's as longer term debt, you're willing to accept a lower rate because the real returns over that 10-year period when the Fed cuts interest rates, because remember, you're assuming recession is going to happen. When recessions happen, Fed cuts rates. So the real rate and inflation will be lower over that set period of time. So you're willing to take a marginal cut on your real return versus a higher cut, and there's more buyers. They want to front run that carnage, basically, and that's what you're seeing here. They're front running the destruction of the market. They're front running the recession, and also this is what we call a crowded trade. If we jump to TLT real quick, as you can see here, this thing has been shorted like new tomorrow. So just to put into perspective for all those out there, to the bottom, that was a 51% haircut to where you are now, 42%. So again, this is a massive short squeeze on the bond markets right here. As you can see here, the volume is absolute capitulation volume here. where shorts are just getting squeezed like no tomorrow. So there's definitely plenty more fuel to hit into TLT, to hit into bonds, to keep squeezing that crowded trade. And the only one that makes it out alive is the first one out the door. Everyone else subsequently follows. And we really haven't seen the last of it. Bonds can definitely squeeze way higher. We saw 42% haircut from where we are at the current price. So that means there's more room to go. Now, what does that actually mean for the market? Because if you don't invest in bonds, it means diddly squat to you essentially, but dollar. That's where we got to take a look at market dollar inversely correlated. We got a nice debt cap bounce possibly on the dollar. However, it is above this area of support, and on top of it could form that inverse head and shoulders, which would be bearish for the market. Okay, so we got bonds not really doing much, so maybe draining liquidity out of the markets because people are rotating into it. We get the dollar strengthening. Well, what else is there? Well, let's take a look at VIX. VIX is always, like I say, the calm before the storm. Kind of doing not much today, up only 1% as the market was down 0.5%. But usually VIX kind of just does really nothing until you get that major spike on the gap. So VIX still holding the $12.80, $12.90 area. So we'll keep you updated on that. But this definitely looks like VIX kind of consolidating in an area. Now VIX can, if we go back here, you can see that we consolidated for quite some time in this area right here before bouncing up higher and then coming right back down. So don't necessarily just see, hey, a VIX spike and the end of the world's going to happen. It definitely means that we could get a pullback in the market, especially when it's running a little hot. Now, why I haven't shown the NASDAQ? Well, that's really important. The NASDAQ is failing in every single regard known to man right now. So taking a look at it, we're holding that 21-day moving average, which is basically your bullish bearish indicator that you can use. It's a simple moving average. For all those that don't know what a simple moving average is, it's basically the average price over a set period of time. So in this case, 21-day moving average means the average price represented as a line over 21 days. So as you can see here, that this area, you're holding that area, but people aren't excited to buy it. You had plenty of opportunity to buy this price up here for, let's see, 1, 2, 3, 4, 5, 6, 7, 8 days. Then came lower. Hey, we bought. We came back down. We bought again. Today, no one was having it. They didn't want to buy this price. They didn't want to buy this price. They didn't want to buy this price. So guess what? We went lower. This is now a weekly breakdown. So what do we say when we talk about weekly breakdowns? We need to see continuation and close. So tomorrow, if we are not back, or when you guys are watching it today, 385.80. Yeah, NASDAQ heading lower, S&P probably heading lower, Russell failed breakout as well. And well, that means that you could see a lot of rotation to the downside. We still have this gap here that we haven't filled on the NASDAQ, neither the S&P. So it could be a bloody December heading for us. Now, seasonality is in your favor if you're playing bullish, just because it is that time of year that volume kind of dries up and the markets can technically swing more bullish just because shorts benefit from higher volume, can initiate short squeezes. And a lot of these big traders, they go on vacation around Christmas time a week before. So you only get about a week of like higher volume versus maybe 2 or 3 weeks of lower volume going into the end of the year. Now, that's not to say that you can't get volume spikes, that you can't get people piling in, just kind of the historical context of what happens. Now, let's take a look at some of the leaders in the market. Apple pushing up strong, however, gap up, sell off today. Microsoft, similar story. Google, again, looks like a possible dead cat bounce below the 50, so we have to see if we reject off of it. Nvidia, just wow, that is a nice monster candle, barely holding that 50-day moving average. So we have to see if it's going to break it, or is this just another dead cat bounce on the way down? And if it does, probably heading back down to the sub $400 price point, which it will lose probably its $1 trillion market cap at that point, once you're in the 385s, let's say. However, we have to see how that all plays out. AVGO, similar story, selling off. AMD, nice red candle on the day, probably coming back down to that 50-day moving average. So a lot more carnage. However, I would like to bring your attention to RSP. RSP had a breakout on the S&P and is kind of holding this upper range here, which again, it could be salvaged. I'm not saying you can. So basically we have to see how it's all going and play it by the levels. Right now, we're looking more bearish skewed. However, we do have a catalyst event on Friday, which is going to be the non-farm payrolls that are coming out. They're expecting basically coming in expecting roughly 180K versus 150 last time, and private 155 versus 99. So do we see a revision on this previous 150 number lower? Do we miss it? How do you average hourly earnings stack up? So again, this is all going to be on deck on Friday, so don't necessarily count the bulls out yet. However, this was a pretty abysmal failure in every regard of the word, because if S&P drags down, then, well, let's see, the rest of the market probably going to follow, filling this gap, come back to that 436 level, and that would be a pretty damper December when we talk about it as a whole. This is usually where you get that Santa Claus rally. However, Santa Claus can still come to town. And thank you guys all for watching. Hope you catch you in the next video, and hope you have a wonderful day.